The most important part of running a business is keeping track of what goes into the business, for example, goods, revenue, loans, and what goes out of the business, for example, goods, expenses, and repayment of debt. Accounting is the concept that businesses use to keep track of all transactions that occur. Within this concept, there is a formula that is used to determine and ensure that the business account remains in balance. This formula is known as the financial equation. The financial equation is simply this: assets equals liability plus owner's equity. It can also be referred to as assets equals liability plus shareholders' equity. Shareholders' equity is referring to the equity in the C and S corporation business structures. In order for the business account to remain in balance, the current assets of the business must be equivalent to the total of the business's current liability plus the current owner's equity. For example, if your business's total current assets equals $500 and current liability is $0, and owner's equity is $500, then the business account is balanced because $500 is equal to $500. Again, if your business's total current assets are $2,000 and current liability is $500 and current owner's equity is $1,500, then the business account is balanced because the total liability and owner's equity equals $2,000, which is equivalent to the total assets. Let's look at some more examples of the financial equation to get a better understanding of how it works. In these examples, we will solve for the missing section in the formula to balance the account. Coors Inc. has cash on hand, money in the bank, and property that amounts to $578,000 in total assets. Coors Inc. also has a credit card, which is a liability. Their stockholders' equity is valued at $152,000. How much is Coors Inc.'s liability? To find the liability, we must subtract the total stockholders' equity, which is $152,000, from total assets, which is $578,000. $578,000 minus $152,000 equals $426,000. Now, total liability and stockholders' equity is $578,000, which is equivalent to total assets. Silver Supplies Inc.'s liability has been estimated to be $25,000. Their stockholders' equity is currently valued at $180,500. How much are Silver Supplies Inc.'s total assets? Since assets equals liability plus stockholders' equity, in this case we will simply add the liability, which is $25,000, and stockholders' equity, which is $180,500. Total liability and stockholders' equity equals $205,000. So that means total assets must equal $205,000. Blazing Savage Inc.'s total current assets are valued at $127,000. However, its total current liability is valued at $17,000. How much is the current value of Blazing Savage stockholders' equity? To find the stockholders' equity, we will subtract total liability, which is $17,000, from total assets, which is $127,000. $127,000 minus $17,000 equals $110,000. Thus, the account is balanced because total assets is equal to total liability, and stockholders' equity. C.S. Brownlee's Inc.'s end-of-year assets was valued at a total of $269,000. C.S. Brownlee's Inc. did not accumulate that much debt. However, their liability has been determined to be $45,000. How much is C.S. Brownlee's Inc.'s current stockholders' equity? To find the current stockholders' equity, we simply subtract the liability, which is $45,000, from the total assets, which is $269,000. $269,000 minus $45,000 equals $224,000. Total liability and stockholders' equity equals $269,000, and the account is balanced. A Helping Hand Inc. has a chief financial officer who must report to the chief executive officer on the amount of current total liability. The CFO knows for certain that the company's total assets are $850,000. She also knows that the stockholders' equity is $675,000. How will she figure out the current liability and how much is it? So the CFO will simply subtract the total stockholders' equity from the total assets. $850,000 minus $675,000 equals $175,000. So she reported a total of $175,000 in total liability to the CEO. Final example. Strong Fizzies Inc. must present a financial statement as an annual report to the shareholders. What is known is that the shareholders' equity is currently valued at $657,450. What is also known is that the company's liability is currently valued at $250,000. How much will the company present as its total current assets at the stakeholders meeting? To find the total assets, we simply add liability plus stockholders' equity, which gives us a total of $907,450. $907,450 will be the amount of total assets presented at the shareholders meeting. These are just basic examples of understanding the financial equation. The application of financial equation in everyday business practices can be and will be much more complex. It's important to remember that the business account that is not balanced shows that there have been errors in recording transactions. All errors are significant, whereas the owner or owners will be held accountable for all reports reported and inspected by the appropriate authorities. As we wrap up this lesson, consider the following questions. What is the financial equation? Why is it important in business?